Thank you, everybody, and welcome to the first of our panel sessions for today. I'm Henry Freeman. We're going to be discussing the value of private capital in building Britain's economy. And it's apt, actually, that Guernsey Finance is sponsoring this session. It's a place that so many venture capital, private equity funds and growth equity funds that invest in the UK are based. It's a real centre of excellence for social infrastructure funds and renewable energy funds, which obviously are all important for the future. And it's really a conduit for international capital to come into the UK. It's, if you like, the British Isles' true centre of excellence for fund establishment and fund administration of private capital funds. And it's built up over 50 years. So it's good to be here. Now, we've got a great conversation this morning. We've got Ross Hamilton of Partners Group, global GP, private equity, private capital investor. We've got Stephen Ruxell of HSBC Asset Management, the international LP investor in private capital funds. And we've got Rachel Wild, political advisor and founder of Public First, and an architect, co-author of the last Tory successful manifesto. Welcome, everybody. A hand for our panel. Thank you. So, let's get into it. This is this first question to open up, really, for the day, for all of you. With foreign direct investment in the UK declining, and IPOs and listed market activity in a reduced state, shall we say, just how important is private capital funds, or how important are private capital funds to UK investment? Let's start with Ross.
Thank you. Private capital funds are definitely playing an increasingly important role. And I think if you look at the bottom end of the funnel, new company formations are continuing to be very strong. I think in Europe, more new companies are being formed than in North America, and the UK is in the top three when you break that down. So the bottom of the funnel and the opportunity set is growing, and while on top you've got kind of challenging macro and other factors going on, there's a real opportunity for private capital to address and help grow and nourish these companies that are coming through. I think the bigger opportunity is definitely at the earlier stage, and that continues to be where we see the greatest funding gap and need for capital. But equally, when you look at the opportunity set, it's pretty exciting.
That's good to hear. And Rachel, you're from the political side. How important politically is private asset funds?
Well, I'll pick up from the previous presentation, which is the government is very well aware that it has no money and people don't want to pay much more tax. And it is implausible that either party is going to go into the next election promising to raise taxes very much. So if it's not going to come from private capital, it's not going to come at all. And again, from the previous presentation, people are very aware that we're in this trap. We have relatively low capital investment in the public sector as well as in the private sector. And output is relatively poor and productivity is relatively poor. So this is the only route they have.
Stephen, anything to add? Where do you see the investment coming from, for example?
Well, I think the data sets show that private capital is growing. I think deal values up, deal volumes are up in the first half of this year. I think fundraising's up. I think bucking a global trend here in the UK, which is always quite useful to see when that's what we need. So I think international investment is where we're going to really need to see directed into the UK economy.
And that international investment landscape, what strategies can be employed to attract more foreign investment to flow into the UK?
Yeah, well, I think obviously from my perspective, sitting in a crown dependency, we play an important part of that investment ecosphere, channeling large amounts of investor capital, international investor capital into the UK. I think the last study that I saw on this topic. Guernsey, for example, we have 70% of all private capital funds are directed into UK investment, with a similar percentage coming from international money. I think what people are looking for is a stable, is a stable environment, be it political, be it economic. They're looking for a way to invest through that. I think, for example, looking for speed, time to market, all of these things. And I think from my perspective, those are really key. We've been opening up new capital flows. Asia is obviously a key market for us. We've been opening up and developing our Asian market, looking more into Japan, as well as our stable Hong Kong or Singapore base. For example, we recently launched a $730 million secondaries fund, and we used the Guernsey platform to do that and funnel money into the UK investment because of our speed to market and our stable jurisdiction. So.
Brilliant. Rachel, on the government policy side, what can government do to help attract more capital to flow through private capital funds and particularly foreign capital to flow through?
So I suppose broadly governments tend to think about this in sort of three different layers. The first is, are we basically the sort of country where people are likely to want to invest? Do we have a skilled workforce? Is it a relatively stable legal and regulatory environment? All the kind of basics, but that's a very significant part of it. The second is, if you think that governments actually have relatively few levers. They can subsidize stuff, they can tax stuff, they can ban stuff, and they can mandate stuff. Most policies fall into one of those four buckets. The second thing they tend to think about is how do they effectively subsidize investment in different ways. We call it de-risking or whatever, but broadly it's subsidizing investment. Full expensing is obviously one of the things that this government has thought of. My guess is, which goes to the third layer, the next government, if it is Labour, will think about it in a somewhat more directive and sector-specific way. And that's the third thing. What kind of companies do we want investment to go in? And I think we're probably going to see a lot more discussion of that in at least sectors than we have in the past.
I suppose on that, the previous government established the British Business Bank to sort of encourage and incentivize capital to flow into certain sectors alongside government funds.
Yeah, but I think it's going to be bigger than that. So if we take, for example, the missions that the Labour Party are talking about, we know that they want to deploy some money of their own, but also try and incentivize a lot of private capital to go into green technologies, some technologies and some infrastructure. I think that will absorb a lot of the policy attention. Mm-hmm. How do they do that? The only other quick thing I would add is, because you mentioned certainty, and I've never talked to a business that doesn't mention certainty for good reason. It's been an unusually politically volatile time the last few years for various reasons. It will probably become slightly more politically stable on the basis of the polls currently in the next few years. But we are a political system that encourages a degree of volatility because we're very centralized. We tend to have one party in charge, and that makes it easy to change policy. So one of the things I would be thinking about in this room is what are the structures that slightly mitigate against that? There are some central structures that do that now, but I actually think there are relatively few local structures. The British Business Bank could be one. I'm not sure it has been yet.
Yeah, no, I think that's right. And I mean, in terms of the British Business Bank, the government could show greater aligned interest with foreign capital if, for example, they were to allow British Business Bank to invest alongside international capital through the Crown dependencies or different fund structures in different locations, not just the UK.
Yeah, I think the truth is, most politicians don't know anything about your industry and they don't know anything about capital and they've never gone near financial services and they think most of what you say is gobbledygook. So that's the first thing to always remember. The second is that instinctively they're entirely agnostic about where the capital comes from as long as they're not going to get in trouble for it. As long as it's not going to be on the front pages, they don't care. And their understanding about the difference between pension funds and VC and private equity and whether it comes from external or internal it's pretty small. It's capital, and it's what is it going into? They care much more about that than where it comes from.
Yeah. Ross, to you, I mean, obviously, you're a large global player. How do you get real investment? I know you guys do it at Partners Group. How do you get real investment into the regions, not just London? How do you really power grassroots business?
I think you have to remember that in the UK, the most attractive companies are fairly well distributed. There's many assets that we would like to own that sit outside London, but also customers are typically all over the UK, and believe it or not, a lot of the smartest people aren't just in London. So there's the talent side as well. And one example is a business we own called Civica, which is a provider of public sector software, and that's helping local authorities and councils digitize their services and their offering. And in order to make that business a success, we needed to be close to our customers, which are up and down the UK, which means building out a network of regional offices to serve those customers and work on projects with them. But importantly, it's also added close to 1,000 specialized jobs, kind of tapping into the deep talent pool on tech and software engineers that we have in the UK. So I think that's a great example where the business to make the thesis work, you really have to penetrate deep into the regions, be with your customers, but also tap into talent pools locally. Because if you don't have the local talent, you can't serve the customers on site. So I think that's a great example.
Yeah. And Stephen, how do you measure and evaluate? You're the LP investor.
Yeah.
How do you measure and evaluate the economic and societal impacts that you're trying to get for your investors through the likes of the funds that you invest in?
Yeah, absolutely. So it's obviously due diligence is absolutely key, and part of due diligence is getting good data. What we're looking for from GPs is we're looking at their processes and we're scoring them against their own results. So what we're looking at, if we're looking at UK investment, we'd be looking at, what connections do they have with local business leaders in the area? What kind of referencing do they have? What kind of, who can they draw on? What talent can they draw on to affect change and affect, good business decisions? So that's all sort of baked in. With regards to other, societal points, we've got that's on the investment side. On the operational side, we'll be looking at things like diversity and inclusion policies. We'll be looking at if it's economic, if it's environmental, we'll be looking at UK PRI status. Lots of different data points, hundreds of different data points, just to score against.
Mm. On the again, sort of Rachel, looking from the government perspective, political perspective, what are the key areas, sectors, or regions that government really wants to make a positive impact on?
So without wanting to sound too cynical, it's always worth remembering that politicians have one core incentive, which is to get elected. And that means that their instinctive intention tends to be on areas which they think change whether they're going to get elected or not. And the reason that there's been so much more conversation about the Midlands and the North in the last several years is because it's become a semi-swing area. So regardless of who is in power, as long as it's volatile electorally, it's going to be interesting politically and therefore interesting in policy terms. So I would expect that although no one's going to talk about levelling up anymore, there's still going to be a lot of attention in how you support investment into regions, and probably even more so if it's under a Labour government, into the core kind of second cities, Birmingham, Manchester, Leeds. We can argue about which should be third or fourth or fifth. I think what will change is the theory about how you do that. And I think what's potentially interesting for this group is I think that there is going to be more of a focus on supporting and growing specific industries that they think are strategic for the future than generalized support.
Okay. Ross, I mean, again, you've sort of spoken a little bit about Civica, but what are some of the biggest opportunities that you see in the UK from the private equity, private capital perspective? Is it venture? Is it growth capital? Is it buyouts?
Yeah, it's a combination of all three. But going back to what I said earlier, if you look at the bottom of the funnel in company formations, there are a lot of great entrepreneurs in the country. There are thousands of businesses being formed every year. But if the capital isn't there to help them succeed, they're either going to fail or they're going to go elsewhere to raise. And you've seen that a little bit in the VC world, where you got to a point and then a lot of businesses would go to the US to go to the next level. And I think a lot's been done, by European and British VCs to address that. And then the next stage at the growth capital level, again, you're seeing more money being raised there. We are actually we are increasing our allocation to growth. UK and Europe will be a large part of that, because that's where we see the bigger opportunity set. At the larger end of the market for buyouts, it is a crowded market, and there are a lot of opportunities. But I think you need to start looking further down if you're going to deliver outsized returns, which ultimately we're trying to achieve for our clients.
Yeah, and Stephen, in terms of the again sort of public worth side, presumably you need to be looking at how transparent reporting from GPs is. How do you do that? That obviously there's more and more ESG metrics that are coming into play.
I think data security is data flow and data security are two of the biggest things between a GP and an LP. And I think, firstly, there needs to be really robust data security to ensure, that the trust is there for data transfer. I think with regards to the quality of data, I'd point to actually one of the supporters, the work of ILPA. I think GPs, if they're not already looking at the work that ILPA's doing on guidance and information templates for sharing information with LPs, that's a fantastic starting place. I think on ESG, data's king. I think when we're looking at GPs, I think everyone's on the journey to varying levels. Some GPs are quite a long way down the journey. Some are just starting. But I think it's fair to say that everyone is on that journey and is starting. And I'm sure the best thing that we can have is more and better quality data to drive better investment decisions for the future.
Okay. And Rachel, you've spoken about the politicians, but from the public perspective, how do you think the public, how receptive do you think the public is to increasing private equity ownership, investment in social infrastructure, as well as private companies?
Well, the first thing I'd say is the public would like to see some infrastructure, social and otherwise. So if it happens versus not happening, that's a good thing. I think it is important. We've talked about ESG, and there's going to be continued scrutiny on ESG, rightly, and the public do support environmental aims. But I think it is important to remember that when you poll them and ask them about their views on business, what matters is the fundamentals, and the biggest fundamental is how they think employees are treated. And as long as people think that companies are forming stable and good employment, their support is relatively high. And if that crumbles, then everything crumbles. And so I just wouldn't forget that basic fundamental. That is always true.
I think that is absolutely key, is how you treat people. I guess, is there anything else that can be done to increase awareness or education that actually private capital full stop, can be a force for good?
I think that's actually persuadable. I mean, of course, the base public is relatively left-wing economically. They would love everyone in this room to be taxed more. That is never going to change. But they also recognise that if businesses start leaving this country for others, that's a really bad thing for the economy. And they too are worried about growth. I wouldn't overdo how much public persuasion and education one can do. Politicians spend their life shouting at the public, and the public hears almost nothing. The billions of pounds you would have to spend to get the public to understand private capital could probably be deployed elsewhere. What's important is the companies they see behave well.
That's a really interesting point. Wrapping things up, because you've got a whole day ahead of you, but just the final thing for each of you, what do you each see as the single biggest priority for private capital when it comes to driving the positive impact to the UK economy? I want very short 3-word or 4-word answers, please. Let's start with Rachel.
Oh, that's mean.
I'll tell you what, no, you're right. I'm going to start with the manager here, Ross.
Yeah.
market ourselves better.
Yes.
Data, quality data.
I think we just need more of it, don't we?
More investment.
it's
I think
more
that
of it.
is a very good point. On that note, please, everyone, round of applause for a wonderful panel. Thank you.